Simplicity is about subtracting the obvious and adding the meaningful. John Maeda. Every day here, we keep it as simple as possible. We subtract the obvious and we add the meaningful. We follow trends. Those are weekly vertical crossovers. They happen on our price percent oscillator and they are exceedingly accurate. Again, we strive for accuracy 75, 85, 90% of the time. And again, how do you know if a stock or an ETF is trackable? It has reliable weekly vertical crossovers. No, they don't all work. We understand that. That's why we apply rules such as our profit and loss bands. I'll put that training at the end of today's video for you to take over the weekend if you have not had it yet. And of course, if you're not a subscriber for free at chartingwealth.com, you won't get things like today's special training, Beware of Confirmation Bias. All sorts of great daily trainings for you. All of it is free. Those of you who want to support the work we do, think about sort of supporting us on Patreon and also buying our book. Let's jump into these charts. We see stocks down, bonds up, gold down, Bitcoin up. Start with the S&P 500, continuing to move up quite nicely as far as the weekly chart looks. We ended up with a higher week at the end of the week, higher high. We see that the price percent oscillator, though, is about flat. Derivative oscillator peaked back on the week ending the 8th of January. So again, seeing things, again, just sort of, well, we'll look at the two-day chart and you can see how things slowed down for a while. And over the last 3 days, we saw where things popped up Wednesday, Thursday, and Friday after about 8 days of sideways movement. Price percent oscillator crossed over going up on the two-day chart back on Wednesday, the 20th. So did I say 3 days? Actually, that's 4 days altogether. So it went sideways for 8 days and up for 4 days. So that's where we are as far as our price percent oscillator goes on the two-day chart. Derivative oscillator also gaining a little bit of energy. We see prices well above that weekly trend line. Excuse me. We go to the two-day, from the two-day to the half-day chart. And of course, what do we see there on that half-day chart? We see where after the crossover on the two-day, things booming up and then sort of petering off over the last day and a half. And again, as we look at the price percent oscillator, it has started losing some energy. Derivative oscillator losing a little bit of energy also. But we'll continue to track that two-day recross going up and see how far along that takes us. Important to pay attention to where price is as far as that weekly trend line goes, with the two-day being as weak as it is. So that's where we are on the S&P 500, the 500 big stocks. Let's go to tech. We see it down for the day a little bit, 0.29%. How did we end up the week? Well, we had that weekly vertical crossover, cross pull away a little bit at the end of the week from the red signal line, heading up. And as we continue to track that, what do we see? Well, we see the weekly chart with a green up candle reaching a higher high. Derivative oscillator still losing momentum. Go to the two-day. And of course, that two-day had bounced over going down. And then, of course, ended this latest two-day candle bouncing over going up, corresponding to the weekly vertical crossover. Again, it would be more exciting if things weren't so tight on the charts, as again, we see them crossing okay on the two-day, but very weak on the weekly. Derivative oscillator did pop over positive, which is good to see. Half-day chart moving up until the afternoon of Thursday, and then sort of losing some of that momentum on Friday. Like we said, down 0.29%, the S&P down 0.37%. So we go from stocks and we head into bonds. Start on the weekly chart as always, up 0.32%. We have a green, solid green candle for the week. Now that is a slowdown in the down movement as opposed to a green, open green box, which is an up movement. Besides the other training I was going to put at the end of this, I'm going to put the Heikin Ashi along with the profit and loss band training. I'm going to put that at the end of today's training too. Those of you who haven't taken that, 200 plus thousand people have. Please take it. Understand these Heikin Ashi candlesticks. We can see the derivative oscillator heading down, price percent oscillator heading down. Also, derivative oscillator gaining a little more momentum. Prices below that weekly trend line. We look at the 2-day chart. We can see where the 2-day hit its low back on Tuesday, the 12th of January. And since then, this is the first red candle we've seen in 6 days. Well, after 6 days of sideways movement. Not much of a red candle, but it is a little bit of one. And of course, we see that price percent oscillator's flat, derivative oscillator losing downward momentum. On the 2-day, look at the 4-hour chart and or the half-day rather. Still have that old habit. Half-day chart. We again see it tracking along, moving up a little bit for the day. Like we said, 0.32%. Price percent oscillator is heading up, derivative oscillator losing upward momentum. So we'll continue to watch and sort of see how things are going to sort out. Own bonds. Are we going to see a greater acceleration down, or is that ending? We'll watch and see, particularly what that 2-day chart does for us as we start the new week. Now, what's up with gold? Gold down 0.79%, our biggest downer for the day. Overall in the week, solid green candle, again showing us slowdown in the down movement, but still down. Price percent oscillator heading down just a little bit. Derivative oscillator losing a little bit of downward momentum. Again, I'm just waiting for gold to get busy and crossover going up. 2-day had been heading up, but this latest candle, as far as the energy on the price percent oscillator, has lost some of that. Derivative oscillator about flat. We see an open box green spinning top indecision tending up, but again, nothing to write home about. We want to see that 2-day crossover going up along with the weekly. This is just my own personal feeling. I want to get back into gold, but I'm not going to do it when it's not moving the right way. You're just asking to get hammered. Now, let's look at the half-day chart. What do we see there? Lots of down movement in the morning, recovered a little bit in the afternoon. Price percent oscillator is positive, but flat. Derivative oscillator positive, losing upward momentum. So again, gold still confirmed down on the weekly and the 2-day. So we want to see gold turn around, or at least I do. Keep hoping for it. We'll wait and see as these markets shake out. What about Bitcoin? Well, Bitcoin up some for the day, 3.21%. What is it looking like though? Still positive, but heading down on the price percent oscillator on that weekly chart. Derivative oscillator after the peak, still heading down. Red open box spinning top, lots of indecision. Look at the 2-day, where is it? Confirmed crossover going down. Means you wouldn't be getting into Bitcoin. You got 4 days of pretty good, strong down movement overall. Again, falling off that price at about $41,000. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. And on the half-day chart, it's heading down too. Now, it had been down for 2 days strong and then sort of sideways and up a little bit. But again, all the pressure on the half-day, on the 2-day, and on the weekly is, again, losing some of that momentum. It is still positive on the weekly. If we have a 2-day recross going up, then, of course, we'll look at a jumping in point. But that's where we are as we end the week. Want to see what's going to happen with stocks. Are they going to continue to rise? They're trying to show us that that's what they're intent on doing. And bonds, again, up a little bit for the day, but overall down. Gold still down. So typically when your bonds are down and your gold's down, your stocks are going to be going up. So we'll continue to watch and see. Hope you're filling out those weekly market worksheets, doing the daily trainings. And again, if you're not a subscriber for free at chartingwealth.com, sign up, get those daily trainings, plus the PDFs for your daily market, weekly market, and trade worksheets. And we have great trainings on how to use all of those, and it's all free. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.